Hello traders, welcome back to the channel. As a forex trader or as a financial market trader, one of the questions you must always ask is, how do I start a new trading week? So in this video, I'll be showing you how I start my trading week, and then I will inspire you to do the same if you are trying to become a profitable trader. So let's get into this particular video. So the way I start my trading week is so simple and straightforward in such a way that it doesn't affect my psychology and it doesn't affect my confidence. So first of all, if you have a trading journal, which I've taught you how to create one, it's right there on my YouTube channel. All you have to do is to search for how to create a trading journal. So this is an example of a trading journal. This particular one has my set of trading rules and my trading plans, how I take trades. And then what I normally do, this is something I've done before. This particular one is the one I use mostly for example. It's not a recent trade examples or trade records. So right here, you're going to see everything. Let's assume you took just 3 trades or 4 trades the previous week. All right, so you're going to come to your trading journal, look at the history of your trading journal. What were the good trades you took and which of those trades were bad trades? All right, this was a live trade record I took actually. You see, it was on a 100K account, a prof account. So I was taking the record. I think this was in the month of January. And everything, the record was there. So I'm giving you an example of how to use the journal. So look at the record. How many trades did you take and how many of them were good? How many of them were bad? You're basically going to have to do some, check and see which of them were good, which of them actually cost you some percentage lost, and how are you going to avoid it next time? Because this particular trading journal has something like comment. The comment is meant to help you understand what were your mistake. You see, this one, for example, took profit too early, news effect was what caused me to lose. I actually have 2 winning, 2 losing trades. And then you can see news effect opposite direction because of FOMO. I was trading the wrong direction because of FOMO. All right, so these are some of the things you must check if you are starting your new week. Now, if you have had losing trades, or let's say you have had straight losing trade last week, what you should do is never to come back to the market with a revenge mission. Never to come back to the market with a revenge mission. Keep away everything that you have in your mind, the baggage you have last week. Start this week afresh. Meditate. Start by meditating. If you are religious, you can start by praying, whatever you want to do. But make sure you've cleared your mind. Make sure you learn some lessons from your mistake of last week and correct them strictly this week. If you cannot take records of your trade, you will never, I can say this again, you will never know how to improve yourself. All right, so that is why you must take records. And before you take trades, let's assume I'm taking trade today. All right, today I think is 22nd of the month of April. All right, I'm making this video on the 22nd of the month of April 2024, and let's assume I'm watching the 4-hour time frame on my chart, even though this is the daily time frame, because I trade intraday. So I mostly check on the 4-hour and then I do some entries on 15-minute, 5-minute. So I will go for 4-hour, 15-minute. All right, this is just an example, guys. I'm not giving you something that is complicated. All right, so let's say I'm looking at a trending market and I want to go bearish. All right, that means to sell. So these are some of the things you must check. What PA am I looking at? GBP, USD, example. And volume, like what standard lot am I going to go into the trade with? 1 standard lot, 2 standard lots. All right, so you must be able to do that. Take record of it so that you can come back and look at it. Record is very important. While I have my set of rules right here, these are the rules. Identify a clear trend, wait for this, wait for that. Everything is rightly placed in this particular journal. All right. So don't forget to check the journal on my YouTube channel right here. If you come over here, all right, this is it, how to create a forex trading journal, and you would see this one also, the way to be profitable in 2024. It was the first video I did this year, so quickly go and check it on my YouTube channel. Now when you're done with checking your record, just the last week record before starting the new week, you can now come to the next thing. So coming to the next thing would be not your chart yet. All right, don't come to your chart. Your chart will be the last thing you will check. Check your economic calendar. Go over to your economic calendar and see what do you have there. All right, so today, the start of the week. This is Monday, officially starting the trading week. Right now I'm using Forex Factory, but there are so many other economic news platforms. You can check them. So today you can literally see that we don't have any high impact news. So what this, you can see impact, right? You see this is orange color. Basically what I do is to filter out my economic calendar. If I come over to where you see filter, and you can see expected impact, we have this red one is the high impact news, this one is medium, this is low, this is no impact, and you see all of the news are activated. So what I normally do is to come over here and apply filter. I just want to see high impact and medium impact news. These are the things I want to see. So if I have any news, let me go back. You see this news, these 5 news by your left hand side, this one I'm just showing you. Any news related to this, you must be careful. This will have CPI, FOMC, NFP, anything around employment, and then interest rates. This is very, very difficult to trade. All right. So you must take notice of the time and, if possible, stay away from the market, especially those of you who are intraday traders. If you're swing trading, you may not feel it that much because you are dealing with the higher time frame. But if you're trading in the lower time frame, if you have high impact news around these ones that I've listed, the CPI, FOMC, NFP, and interest rates, or unemployment or employment, you must be careful with it. All right, I hope this is understandable. So most of this news comes in the afternoon if you are in UK, and if you are in US, it comes in the morning, that is 8 a.m. US time, especially if you are trading the US dollar paired currency, the US dollar pairs. All right, so let's go back to the main thing now. Going back to your charts. So this is the London session. And what I do, mostly trading in the London session, I trade the major currencies in Europe. I trade the major currencies in Europe. And that means I trade pairs that have Euro or GBP. All right. But most of the time I trade their majors. What I mean by their majors is I trade the GBP USD or Euro USD. These are the major pairs. All right. When we say major pairs, they are basically the major currencies that have the US dollar. These are major currencies and they have the US dollar. You can check Euro JPY, you can check GBP JPY, or any of them, but I trade this one mostly. So what do they have in common? They have the dollar in common. And what that means is that I have to look at what the dollar is going to do, because the dollar is basically one of the most heavily traded currency. Let me correct this mistake. And so also you must be able to check the dollar indices. So that is what we call the intermarket analysis, because if we can have the direction of the dollar clearly, then we would be able to trade any other currency pair that has the dollar as its pair correctly. So the DXY is the name for the dollar index on this particular platform, TradingView. Other platforms have a different name for it, but this is the dollar index. And what does that mean? It is simply the indices. So if we have the DXY going up or showing us a sign of going bullish, what does that mean to this currency pair? It means these currency pairs are going to go bearish. It's an inverse correlation. Please take notice of it. So if we have the US dollar index going up, just like you can see here, we expect this currency pairs to be overall bearish. So I normally do it on the weekly time frame and the daily time frame, and then I check the lower time frames. But if you don't want to distract yourself so much, you don't even need the weekly. All right, you don't even need the weekly because you are trading intraday. So from the weekly perspective, you can actually see what do you have. The dollar is bullish. All right, break of structure, all right, a break of structure to the upside. Now notice clearly that there are two things that happen to price: where price is and where it wants to go to. Now ultimately, we all know that price is always after liquidity. Liquidity is like the bloodline, right? It's just like the life-giving factor, is the fuel that gives price energy to move. So if price is going to seek for this buy-side liquidity, external liquidity to be precise, we have a buy-side liquidity here. Price is going to seek for that buy-side liquidity, and it is the most recent place that price will want to go to. Then it must be our area of focus. This guy is attracting price. On the weekly, that is the long time perspective. But is it going to happen now? Definitely no. And this is why we have the gift of time frame. Time frame helps us to trade from the lower perspective, and then we'll be able to reach this goal at the end of the day. But before coming here, price will always want to do business with the inner cycle. All right, what that means is that price will push, seek for somebody to help him with energy. We call it repricing. Into this area, it will look for an institutional reference. But look at this, it pushed, came back to this small fair value gap, or this bullish order block. You can see it right here. And then it got some energy to push up again to this area. Do you think price is going to continue? No. From my own perspective, I think price will want to reprice down to see if it can find a better price. Every time price is coming, or the institution are doing that, they want to find some kind of a confident area to push up. And if you look closely, this is a bullish mitigation block, all right, on the weekly time frame. So what I'm expecting to do is to see price do this, all right. So what we are seeing from this place, price push down, have this mitigation block, bullish. It has a fair value gap here, right? Which means price wants to come back and gain some energy. Coming down here means it wants to come and get some energy. Energy is food for price. Internal range area, all right? So the range is basically from here. Let's give it from here to here, all right? So the reason why this fair value gap may not be very strong for price, it is simply because it is on the premium side of this range. And things like this on the premium side of this range doesn't hold so much relevance. So price will decide to use maybe this bullish order block, which is half on premium, half on discount. But if price wants to ultimately do the right thing, it will consider this fair value gap and then the bullish order block close to it. But these things I'm showing you, they are the long time perspective of what price will do. So we will take advantage of this from the lower time frame, and this is why we have things like the daily time frame, so we can break them down into smaller information, because the smallest information is what we need now. So the same thing happening now. Price range, this range is now the most important thing. Are you now seeing what I'm saying? Even though price has that ultimate liquidity area on the weekly, it must have to do something with this. Now price have to come back into this area, discount, right? What do you see in discount? A fair value gap, buy side imbalance, sell side inefficiency. This is what you have in the discount area. So is it fair enough if I say price is supposed to come down here? Yes. Now another information here, price have traded into this vacuum block. all right, or new week opening gap, which is more reason for price to consider coming down here to internal range liquidity, because the last time price pushed up, it had a break of structure to the upside. All right, I'm taking this gradually so you can see how to start your new week. As price will come back into this area, it means we will expect price to be bearish. And if price is going to be bearish on the daily, what does that mean? It means foreign currencies will be bullish. But that doesn't mean that the trend has changed. Remember, I told you that every time frame has its own market structure delineation differently, and it has its own directional bias. Because I am bearish on daily, it doesn't mean that the bullishness on the weekly time frame is a lie. No, it simply means price is respecting the law of fractality. It is just operating in chunk, just fractal, brave, small, and then give opportunity for this to form, give opportunity for that to form. Now going back to the 4-hour time frame, you now see how we are getting these details gradually. All right, gradually. All right, so notice what has happened here. I just want you to notice what has happened here. Now, on the daily time frame, remember, this was my break of structure. And this is why I told you that every time frame has its own break of structure differently. But when I come to the 4-hour, this is how I'm going to see it. This, my shift in market structure. This was my shift in market structure because price had a shifting structure here. Did it have any shifting structure? Let me be sure, guys. All right, let me be very sure. Yes, it had a shifting market structure here, which means price went from bullishness to bearishness, and then it now came back to bullishness. So this is a market structure shift. Remember what I did? I did not do anything wrong. All I did was to refine my market structure. So don't get confused. So as price was pushing to this area, retraced, push again, break of structure up. Now we have a shift in market structure on the 4-hour time frame. What does that mean? We were bullish. All right. So notice how the progression went. Bearish because we had shifting structure, now bullish into bullishness, now bearish. What does that mean? We are expecting price to do this. All right. So from the 4-hour, we can deduce that the DXY is bearish, and this is why you need it. If you go to the lower time frame, lower than these, guys, lower than these, the same thing is telling you. Now, this is not my market structure shift. I will have to look for something here. All right. This is now my market structure shift on the lower time frame. So I'm doing this so I can see it from the smaller time frame perspective. I hope you are learning something from here. All right. Or if you want to stop from the 4-hour and wait for the trade because it will take longer time. I don't have the patience to wait for all this. All right. Wait, coming back to this area, take a sell and then expect price to come here. But on the 1-hour, I will have the smallest detail and I'm taking trade from there. It means I'm going to get the smallest risks given to me. All right. So we have this, boom, price coming and having these movements we're expecting to see price do. So from this point, what do you want to see? The question is, what do you want to see? From this point, guys, I can tell you that price is ranging, waiting for a direction. So this is what normally happens. Price will go bullish. If it wants to go bullish, it will start like this. Bullishness, bullishness. And if it wants to go bearish, it will have to range before it goes bearish, or it continues bullishness. So range is a way of giving price chance to decide what it wants to do. So every time price wants to go to a particular direction, it will range. And so also we can see here, even though we had shifting structure, we are now ranging so we can have a direction finally. All right. Boom. Going to the lower side. I hope this is understandable. All right. So if I am going to any asset now, let's say Euro USD, remember I told you because it is the London session, I will have to do that. So this is how I'm going to see the same thing. All right. The same thing. Is that not a shifting structure to the upside? market structure shift. I'm going straight to the 1 hour time frame, so I don't want to waste so much time because I've done everything on DXY. It's the exact opposite I would do here. All right, so this is the start of the week, so you're going to wait for price to give you opportunity. So I'm watching everything happening here. So this is literally a ranging market, guys. It is a range. You don't want to do any business here. You just have to be careful. Shifting structure, price, and this is why shifting structure is very important. The lowest point is still here. As far as we did not cross below it, we are still bullish on foreign currencies. Why? Because DXY have shifted structure, it is bearish. Foreign currencies are going to be bullish. So I'm waiting for price to take out this guy, and then I'll start going bullish. All right, this is going to be a break of structure to the upside, and then I will consider going bullish. If I see that, it is only when this happens that I will go bullish. If this does not happen, it means price wants to continue going bearish. All right, so two things will happen. This is our best prediction for the day. I hope this video helps you guys, and make sure you comment if it helps you. Thank you guys for watching. See you next time.